Elon Musk is at it again. Now he's announced that he's put an offer in to officially buy Twitter for $54 or something like that a share. It's been a pretty dormant deal, and he's been making the news lately with the whole getting involved in Ukrainian politics, and now this. So I have Twitter loaded up in the stock research tool built by yours truly. And if you want to get your hands on this software, folks, I'll tell you how and later on in the video. But take a look at this, folks. This company's stock price has been down over the last little while, pretty much from 2021. It was hovering around the $40 mark for the longest time. And I'll just zoom in here. Take a look at that. $41 and hasn't done nothing. Then boom, jumped up today to $52 a share. Based off of this news, it just skyrocketed like 20 something percent. So from a trading perspective, if you were one of these people that were hanging on to this company from the initial birth of this deal, you know what, made 20% on your money within a couple months, boom, and you're in and out. But if you are a fundamental investor like myself and a lot of other people that watch this channel, what is this company worth? So we're gonna dive deep into the numbers of Twitter. And spoiler alert, folks, it's not that great. I'll tell you right now, we are ranking this company a 4 out of 10. So what my software does, it takes a look at the company's financial statements and then it grades it out of 10. With this company here, oh, my alarm. Yep, 4 o'clock, phenomenal. With Twitter here, we are ranking this company a 4 out of 10. So what are they doing right? Well, on average, they have a pretty low PE ratio. It's underneath 22.5, so that's good. They have a pretty decent current ratio, sitting at 7.15, so that's phenomenal. They are decreasing the amount of shares outstanding, as we can see, and the revenue has been going up over the last 5 years. These are all good points, I gotta say. The current ratio being one of the strongest ones. However, that is where the gravy train stops, because everything else on this company is an absolute disaster. They have a low ROE, they have decreasing earnings per share, they have a high debt to equity ratio sitting above that 50% threshold, which we don't want to see. Our 5-year free cash flow has been going down, our return on invested capital has been going down, our net income is going down. So there's a lot of red across the board here. So what does that scream to me? Instantly, to be honest, I'm going to say a little bit of an overvaluation, especially when you have all these decreasing numbers and the stock price just jumps up for an excitement based off of Elon purchasing this company. That doesn't scream like a buy to me. Now, here's the thing, folks. If you're trading this company, it's one thing, because if you're a trader, you're looking for the outlook of the business. But if you're an investor and you actually believe in the fundamentals of this business, then it's hard to gauge. Because here's the thing, folks, with Twitter, it has become such a toxic, I think the platform on its own and the business is unique and ideal. It has short bits of information that you can get across. However, with the censorship issue that exists on this platform, and it doesn't know whether to be either a free speech platform where it's just, town square mentality. Everyone can go and talk, and, there's no consequences. Just if you want to respond to someone's opinion, then you're able to do that. And I feel like with this business practice not being able to be solidified, this is where this business becomes a mess. And it's evident here in the numbers. And the numbers speak for itself. Because one of the main things that Elon was talking about was how many of the accounts that we actually have on Twitter are the actual bot accounts, and people getting banned left and right. Why would you want to join a platform, personally, that where I am restricted of what I can say and cannot say? I want to be able to join a platform where if I want to talk like an idiot, I want someone to be able to call me out on my idiocy. I don't want a company that has Big Brother breathing down my neck and says, you know what, we don't like what you have to say here. We're going to just silence your voice completely. Because there's an old saying, folks, if you cut off a man's tongue, you're not calling him a liar, but you're scared of what he has to say. So that takes away conversation. And whatever I have to say about that, put that aside. The numbers are not looking good about this company. So we have negative ROE. Our EPS is down. Our PE ratio is in the negatives. This company just, to me, screams doesn't know how to make money. So I'm going to make this video short and sweet and to the point. This I don't see as a long-term investment, as well as if he purchases this company for whatever amount of shares are, your upswing from here is just, 52 to 54, whatever it may come out to be. That's what you're going to be getting per share, and he's going to probably rework this business and turn it into God knows what. I mean, I like Elon. He's been making a fool of himself lately with the whole Ukrainian thing, but if he can rework this business to be a decent social media platform, all power to him. In 2018 and 2019, they had some pretty decent years, and then it's just been a shit show. Excuse my language, but last couple of years, I don't know. Let's jump into the price analysis section of this video. So what I like to do here, folks, I like to do a 10-year analysis, and what my software does is, using the historic numbers that this company provides us in terms of growth and stuff like that, we're going to plug these numbers into these lovely boxes, and we'll spit out a price of what we should be paying for this company today based off of our future predictions. So I'm going to fill out these boxes, and we'll talk about it in just a quick second, so stand by. Folks, before we jump into the last section of this video, if you want to get your hands on this software and make your research process a lot more easier, head over to leodeleo.com. The link will be found in the description box below, or you can find it on the main page of my channel. And from there, you can go to the sign up, become a member to the site. It's completely free to become a member of the site, and you can subscribe to the website. There's a bunch of payment plans there. Use the code FOUNDER for 20% off your subscription for life. Limited spots available. I believe there's only 50 of these coupons out there, folks. So get them while they're hot. So anyways, jumping in, we'll show you what I did. Take a look at this. So if you're new to the channel, I like to try to stay as conservative as possible to try to plan out this revenue growth. So I did 10, 12, and 14% based off of my 5 and 10-year numbers, because I got to be conservative, folks. Now, with my profit margin and free cash flow margins, I like to try to stay within what is reasonable, because we have negative numbers on the board here, which we don't like. So I decided to give myself a little bit of a discount by going 7, 8, and 8.5 to reflect the 5-year averages, as well as 5, 6, and 7% for our free cash flow to reflect the 5 and the 10 and 5-year numbers that we have. Price of free cash flow, PE ratio, I like to go with 12, 14, 16, and 14, 16, and 18 to try to give myself some. I like to find companies that make sense within those ranges, because for me, that makes the most amount of sense, along with a 13% return. Take a look at this. Take a look at this, guys. Current price, $52 a share. Our average calculation comes out to be $16. 22 on the high side, 9 on the low end, and 15 slap dead in the center. This company is extremely overvalued. And look, if you have a brainstem, you can figure this one out, folks, because look at this. What do they have going for them? They have decreasing free cash flow, a low return on invested capital, decreasing net income. This company just doesn't know how to make money, and I'm really extending an arm out to them, considering I'm giving them all positive numbers. Maybe my revenue growth number is somewhat low, but over the last 5 years, they've only grown 15%. So, like, this is somewhat aggressive. This is like year to year growing 10%. That is extremely aggressive. And I'm only coming out to being $16 a share. This is absolutely horrendous. So, what is my recommendation now? I can't even say recommendation, but for me, I'm not even jumping in on this hype. And the fact that people have been jumping on board and bought up these shares based off news, this is where you guys have to look and analyze what is actually going on. Read between the lines. If you're trading and you're able to make money based off that way, sure. But this channel here is dedicated towards a fundamental based investing process rooted in value investing. So for me, when I look at a company like Twitter, long term, I don't see anything there, at least at the current moment. Maybe in the future, if Elon does something different with this company, there might be something. However, at the current time, at the time of making this video, there's nothing there but an overpriced social media network. If this thing was trading at $16, and I believe he's overpaying for this company myself, but in its current iteration. But you know what? He's got the means to do it. So if he wants to do it, by all means. Anyways, folks, that's the video. Write down in the comment section below a company you want to see evaluated. But better yet, If you want to get your hands on this software, like I said, leodeleo.com. It's the name of my channel, and you can go here and you'll have access once you sign up to the stock research tool that I'm currently using, the stock research app, as well as exclusive content only available to my subscribers. I'm also starting up a community page so I can connect a lot of you like-minded value investors. So for those that have been supporting the channel up to this point, thank you so much. And remember, use the code FOUNDER at checkout to get 20% off your subscription for life. And I'll make a video on what exactly my software does, but the main thing is, folks, it makes this research process a lot more easier and a lot more tangible. Look at that, 10 minutes in and I already know what I have to know about this company. Alright, Alexa, don't have to interrupt my video like that. But within 10 minutes of talking, I know exactly what this company is about. I know where the price stands, and if I want to do a deeper dive into this business, I have the news section right here to get myself up to speed completely. Something to consider, folks, and I hope you get on board. Anyways, that's the video, folks. Thank you so much for watching. Until next time.